And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As usual, it's all about where the action is in the broader markets. And we did, again, have a bit of a bumpy ride this week. And a lot of it was news driven. And certainly earnings were front and center as well. When taking a look at some of those news items last week, today, Friday, we are in a mode where those trade war fears have receded, and they did begin to recede over the weekend when the framework was supposedly set up for that meeting between President Trump and President Xi. So as we take a look at some of the other news items that drove price action last week, Fed Chair Powell did speak on Wednesday after the FOMC's meeting, and it was during that discussion that he mentioned the rate cut in December that had been pretty much thought about as being done. He said it was not in any way a done deal, that there would still need to be quite a bit of discussion, that there was dissension among the FOMC governors. So that brought the markets down quite a bit. We did see interest rates rise. And from there, again, I talked about earnings. We're going to get into some of those big M7 names, their numbers, and how it impacted the broader markets. Next week, we are due to have the monthly employment data coming out. We will be getting the ADP, which is the corporate workforce data as it relates to those numbers. Also, PCE data was due to be released, and that will not be forthcoming as well next week. But let's go ahead and take a look at these markets and see where did we close for the week. And here we are, daily price chart of the S&P 500. And again, we did start the week on a fairly bullish note as those trade war fears receded. And then as we progressed through the week, the FOMC meeting notes did pull the markets back. And then really uneven earnings, certainly around those M7 names, was a bit disturbing as well. But net, we did close the week above that 10-day simple moving average. We have a positive RSI and a positive MACD. So technically, the uptrend is very firmly in place. I did want to share with you that equal weighted S&P 500 because the equal weighted S&P was down 1.7% relative to the broader markets. This is an old markup here, but you can see that that RSI is now in negative territory, and we did close back above that, below that 50-day. In essence, the breadth within the markets did narrow last week. So from here, let's go ahead and take a look at that. We're going to look at the 11 underlying sectors in the S&P 500, a 2-month daily price chart view, and it's sorted by relative strength. Let's go ahead and do that now, because what we want to get our arms around is where that strength is relative to weakness, and paying attention to this on a regular basis will put you in front of rotation as it relates to money flows in and out of these various sectors. So front and center, technology still at the forefront, and you can see that we had that nice advance. A lot of this having to do with NVDA. We're going to talk about the meeting and as far as their CEO's comments, but a lot of good going on there. And then earnings too did help this technology sector, and we are sitting up here. We had that nice advance and then a bit of a sideways price action, very standard. We got into that overbought position. So we are still very much in a confirmed uptrend with technology. Healthcare had a pretty decent week. It was actually down more than the markets, however, down 1.2%. But that RSI remaining up here in positive territory, likewise with the MACD. We did have that negative crossover. I'll share with you where the strength is emanating from within this healthcare area as we take a look at some of these other events and sectors that were on the move last week. Let's take a look at XLY. This is consumer discretionary, and you can see that we did close back below that 50-day simple moving average, all about very negative results coming in from well-known retailers. We're going to take a look at those names. And we did get that nice bounce today, and it could have everything to do with Amazon. Came in with great numbers, and the stock is a heavyweight in XLY. So we are back in an uptrend with the discretionary area, but it is very notable. It is the haves and have-nots. So you do need to be selective with this group. And certainly while tower fears have receded, they are still lingering in the background. Let's go ahead and take a look at another industry group that was on the move last week, and that is XLF. This is the financial ETF, and it was down about 2%. And we really are languishing with this group now down below that 50-day simple moving average. And again, in this next segment, I'll share with you one of the weaker areas in the financial sector and why. But net, we have a negative RSI, negative MACD, and again, that closed below that 50 days. So I would suggest paring back holdings in the financial space at this time. As we take a look at these weaker areas, it is going to be earnings related here as well. This is XLP. Consumer staples, we are seeing a number of these larger food stores coming in with very weak numbers, and certainly other areas. And we did see a very sharp drop in the consumer staples area. So from here, we're going to move beyond those broader sectors and take a look at the industry groups beneath the surface. And this again is going to be all about uncovering and really refining that sense of where that strength is. So front and center, IBB, I talked about healthcare having an area that did perform well, and that is biotechs up almost 3%. This is a very vibrant area. We are seeing a lot by way of FDA approvals, potential merger activity, and it is a group on the move. Semiconductors up here at the forefront. We did get a couple of stocks came out with good numbers all about AI related demand. And by the way, with biotechs, a lot of that advance is AI related as well because of new features or new ways that they can discover these newer drugs. So I did talk about interest rates rising on Fed Chair Powell's comments, and we can see that we're sitting up here now at that 4.1% level. So not overly ominous at this time. However, if we continue to advance higher, we could see the markets push back. And of course, those sensitive areas to those interest rate rising scenarios will get hit the hardest. Looking at healthcare, this is an area that started out fairly well, but it did end the week in negative territory. This is the medical devices ETF. So we did have this nice gap up here. A couple of companies came out with some very good numbers, but net, we are pulling back in that healthcare products area. Bank stocks talked about the weakness there. Let's take a look. You can see that we did close back below that 50-day simple moving average, and this is all about that debt related fear. A couple of regional banks did have issues, and from there we did have a secondary fear that pushed the bank stocks lower. But in the end, we are in a very confirmed downtrend. We have that RSI below 50, and then we have that MACD down here in negative territory as well. So not an area you would want to certainly overweight. Home builders continuing to struggle. Let's take a look at that retail group. I talked about a couple of companies that came out with very negative earnings, which in turn pushed their peer stocks lower. This is XRT, the S&P 500 retail ETF, super high volume on this selling. You are going to want to look for support above this low here. And in the end, it is an area of the markets where you are going to need to be quite selective if you are looking to get involved. And let's go ahead and take a look at those M7 names. I talked about earnings reports last week, and we can see Alphabet. Again, this is rated by that relative strength indicator, those M7 stocks. And here we are with Alphabet gapping up in response, super high volume, and the stock was already sitting at a new high, so quite impressive. This is all about advertising sales. with their media streaming, among other areas that came in above estimates. And the good news is today we saw a little bit of a pullback, but buyers did come in on that dip so that we are closing the week in the upper trading range. Let's take a look at an intraday chart here so that we can confirm that. Here we are with Thursday's gap up in response to Wednesday afternoon's earnings. And then we did fizzle a bit. However, we did again recover that earlier in today's pullback so that we're sitting up here fairly bullishly on Alphabet. Let's go ahead and take a look at Apple, also coming out with good numbers and also sitting at a new high prior to releasing those numbers. So good to see that it was able to advance further. We do have bullish price action generally in that name as well. Amazon talked about that gap up today in response to earnings. I'll just take a minute and mark this chart up because in this move today, that gap up, we did experience a nice base breakout. And the lengthier that base is prior to the breakout, statistically, the longer your advance out of that base can be. So we had that gap up. Let's take a look at that super high volume. We now have a bullish MACD joining a positive RSI. So Amazon was not sitting at a new high, and they are setting up even more constructively than the other names that we've been reviewing. From here, I'm going to take us to a weekly chart to highlight the fact that we are advancing out of an even longer base. And again, that advance could be quite healthy out of here. So we are going to move through and take a look at some of these other names that did not fare well, and that front and center is going to be Meta Platforms. And here we are, gap down. The company came in with numbers below estimates. So we did have that significant break, but it was added to today. And again, super high volume on this selling. If you want to get a closer look at that price action, we can take a quick look. This is a 15-minute price chart, and I'm highlighting this because here we are with that gap down. There was a little bit of a rally attempt. However, it did fizzle into the close. So net Meta is setting up potentially further downside. Microsoft is another name that struggled on their earnings release. And here we are with that gap down. The stock is finding support at that 50-day simple moving average, but very concerning to me is the very high volume on that selling. And then we now have a negative RSI. Let's go ahead and take a look at those three software stocks that we reviewed last week. And I want to thank everyone who joined in with their comments. Overwhelmingly, there was one stock that was chosen as a potential winner. Let's take a look at that stock. That is Zscaler. And the company is in that cybersecurity software space, and it was setting up really quite nicely for a continued advance. And we did see that. We have a nice positive RSI and MACD. I'm going to pull up that weekly chart and share with you that we did have a further advance out of that base breakout. We do have a nice MACD crossover on the weekly, which is good news, and then a positive RSI. So the longer term outlook for the stock is constructive as well. However, we did have that 2.5%. Let's take a look at a name that really came to life today among those three stocks, and that is Zoom Communications, ZM. And this particular stock did experience a base breakout today, and it's all about news that they are partnering with NVIDIA to enhance their AI capabilities. And this is all about having meetings condensed using AI to provide transcripts that are concise. And we can see that the RSI is up here in positive territory, and we'd already had that nice MACD crossover into positive territory. But let's key in on that volume on today's move in response to that news. And it's also of note that they are going to be reporting their earnings in 3 weeks. But we did, in fact, close at that base breakout. I did mark this up earlier, and we were less than a point away. However, we were able to execute that 6-week base breakout. Now, this weekly move will provide you with further insight as to just how much the stock has deteriorated. As many of you know, this was a COVID darling that did fall out of favor. However, if we look at this longer term, you can see that we have an even lengthier base breakout, positive RSI and MACD, and the stock was up 3.5% for the week. Last up is Intuit, and we can take a look at this particular name because it did not advance, certainly similarly to the other stocks. It is still residing below its key 50-day simple moving average. That RSI, while it is turning up, it is in negative territory, and likewise with the MACD in negative territory. And I'm highlighting this fact that their prior earnings quarterly results were below estimates, and the company did guide growth lower going forward. So this would be giving you a sense of why you may not want to favor it, this particular stock. We'll go ahead and pull up the weekly on this name as well, and you'll see that the momentum is below that 50 with the RSI on the weekly, and then we now have a negative MACD. So the longer term outlook remains unconstructive, and the stock was down about 2.25%. And so the big winner this week was Zoom Video on a sharp 3.5% advance today on news. While we're here, I did want to talk a bit about that sharp pullback that we got in AI-related stocks, certainly trade war related and otherwise. And we're going to take a look at a couple of names that were hit the week before last. And we're looking at a daily price chart of OKLO. Of course, they are very closely aligned with that AI space because of their capabilities to provide nuclear energy in a very efficient way. The stock hit a new high going into this latter part of October. But let's take a look at this sharp drop that took place the week before last. We can see it did take place on very high volume. And then we had that black line down through the red, signaling that this sharp uptrend at the very least was due a pause, but we did see a sharp pullback. And then the RSI got into negative territory for OKLO. So from my work, on the lookout for continued, at the very least, consolidation, not looking particularly bullish quite yet. But let's take a look at a peer stock only in the sense that they also provide energy using fuel cells to AI-related projects. And this is BE. What I wanted to highlight here is that Bloom Energy pulled back with the group, found support at that 21-day simple moving average. And the difference here is they reported their earnings this week, and they had a first quarter of operating profits in 10 years. They also had very strong earnings. And this is going to be that key differentiator as it relates to these pullbacks. Should you buy on that pullback or stay with the stock? When you have a company that, such as Bloom Energy, that is very established, they have an existing customer base, and they report strong numbers. Here's that nice gap up into a base breakout. Certainly a different story than OKLO, where you have a lot of enthusiasm for the concept of the company, but they just don't have solid earnings that are supporting it. Another area that I wanted to share with you is we had a couple of names last week and areas that where their ETFs showed constructively. And then from there, we'll take a look at some of the names in there. This is the S&P 500 pharmaceutical ETF. And I talked about healthcare stocks not faring that well last week, but we did have pockets of strength. And this is going to be all about earnings. Let's take a look at one of the stocks in that pharmaceutical space that came out with strong numbers last week. This is Eli Lilly. Here's that advance on earnings and then a secondary move higher. Nice high volume characteristics. And let's take a look at this MACD. Black line just crossing up through the red, signaling a new uptrend. And then we had that nice base breakout with a positive RSI. And then last week, there were several questions as far as covering individual stocks. So let's take a moment and do that. First up is CME, was requested to be taken a close look at. And this is CME Group, and they have a platform that provides the ability mostly for futures to be traded. It is in the financial space as far as providing services. We can see on this daily price chart of CME that we did close below that 200-day simple moving average on Wednesday. And since then, we've been trying to advance higher. However, we still have a negative RSI and a negative MACD. And again, you are going to want to use history as your guide. Take a look at some of these metrics that would inform you that CMG was in a nice uptrend. It's going to be a move back above that 50, 21, and 10-day simple moving average. Marry that with that MACD crossover and a positive RSI. So we are a bit trapped here and it's not looking constructive. But I did want to share with you a peer stock to CME that is looking constructive, and that is IBKR. This is Interactive Brokers, and they provide a lot more by way of product and trading platforms. They are much more involved in bonds in addition to equities. So IBKR, you can see it pulled back to this 50-day simple moving average, and we are potentially in the throes of forming the right side of a base. We have that MACD poised for a crossover and then a positive RSI, and really all about comparing what you would want to be on the lookout for to decide that the stock would be interesting or certainly headed higher. Another name that came up as a question last week is Uber Technologies. And what I wanted to highlight for you here is that we've had a lot of fits and starts with this particular company attempting to move higher. They are due to release their earnings next Tuesday. And if we go back and take a look, they did report their prior earnings on August 6th. So you can see we had a little bit of an advance, but just were unable to advance above those prior highs. And as you may recall, the markets are in a very confirmed uptrend. We've seen sharp advances, and Uber has not been outperforming or certainly in line with those broader markets, so it is not going to be more as interesting. However, on Tuesday, should they release earnings above estimates and gap up above this 101 level, it would present an entirely different picture. I talked about AI-related stocks on the move higher because of earnings. Let's take a look at a couple of names, and both of the names we're going to be looking at here are a part of my MEM Edge report suggested holdings list. They have been for some time, and here we are with Caterpillar. It was one of the sharpest advancers on Wednesday in the S&P 500. Take a look at that volume. So the stock did exhibit a base breakout, heavy volume, positive RSI, and positive MACD. And this is all about data center related backlogs as far as orders. And you can see the sharp advance the stock did gain. And it is in a very orderly period of consolidation subsequent to that. I did mention that NVDA had good news last week. Their CEO spoke at their major conference, and it was all about new partnerships, new deals, new products, and the markets like what they heard. We did see this gap up into a base breakout. We had that nice MACD crossover, high volume on the gap up, and then a positive RSI and a positive MACD. So a lot of this is pointing to why we did see vibrancy in semiconductor stocks and AI related stocks, and primarily because of these heavyweight names that are seeing a lot of growth, not only currently, but going forward. Here we are with SOXX. This is that semiconductor ETF in a very nice confirmed uptrend. And I did mention to you those retail names that did not fare well last week. Let's take a look at a couple of the stocks that got hit pretty hard. This is Chipotle, CMG, big gap down very, very high volume, further selling today. You can see that black line down through the red, that MACD now in negative territory. Likewise with the RSI. From here, we can take a look at some of the other names that are peer stocks that are in this industry group. And this is CAVA Group, CAVA, also exhibiting that gap down. And it's all about reduced consumer spending, according to studies. A lot of people are pulling back as far as eating out. So we are seeing a sharp response in the growth prospects for these companies. This is Wingstop, another company that gapped down very significantly on the news that consumer spending in that particular area is receding. And that's it for this week. I did want to thank those again that participated in our survey last week relative to those stocks. And as always, take a look at my twice weekly MEM Edge report. There is a link below to trial that at no cost. We are in a bit of a rocky period here with the markets. I did note how we are seeing some sectors that are falling behind. Likewise, with those industry groups, you want to make sure you're not involved in those areas. As we continue to advance, earnings season is going to pick up further next week. As always, go ahead and hit that like button. And again, any comments are welcome. Have a great weekend. I'll see you here next Friday.